What if I told you that everything you've been taught about scaling an e-commerce business is fundamentally broken? Not just incomplete, but broken. The old ways are actually hurting your growth potential. Hey everyone, my name is Chappell, and after working with over 1,000 plus e-commerce brands managing more than $600 million in ad spend and generating just north of $2 billion in client revenue, I've noticed something interesting. And weirdly, I haven't seen anyone else talk about this on YouTube, and you see, I noticed the brands that scale the fastest aren't the ones with the best products or even the best marketing. They're the ones that have figured out one simple truth that nobody talks about. But instead of just telling you what I mean, let me show you with an actual example. Last year, I was working with a client, let's call them brand X, who had an amazing product with insane conversion rates. Their ads were crushing it with a 3.5x ROAS, and by all conventional metrics, they should have been scaling to the moon. I mean, they were doing everything conventional wisdom told them, and they were doing it perfectly, yet they weren't able to scale to the moon. But month after month, they kept hitting the same revenue ceiling no matter what they tried. New creative, new audiences, new platforms, we just couldn't break through. That's when I noticed something. Every time we increased their ad spend for a few days, their performance would skyrocket. But then they'd have to pull back because of cash flow constraints. That's when it dawned on me how big of a problem cash flow constraints actually are. So I started to investigate. Sure enough, now that I knew what to look for, I found the exact same pattern with my other clients. In fact, Everyday Dose was stuck at $5 million in annual revenue until they solved this one problem. And then they shot up to $100 million in just 12 months. Caraway had to choke their ad spend despite seeing a 4 to 5x ROAS because of the same issue. And even Water Doctor went from 0 to 7 figures in a single year once they figured this out. But before I share what solved all these cash flow constraints and actually allowed these businesses to scale to the moon, let me ask you something. Have you ever had to cut back your ad spend right after your campaigns were starting to scale? Miss out on bulk inventory discounts because you didn't have the funds available? Make painful decisions on where to allocate your limited cash? And if you're like 94% of e-commerce founders that I've worked with, you're nodding your head right now. What I'm about to share isn't another tactic about Facebook ads or TikTok ad strategy. It's not even about creatives or testing new platforms. It's something far more fundamental that the gurus never want to talk about because they don't understand the real mechanisms of scaling e-commerce business. You see, something is quietly limiting your business growth, and you may not even realize it. Ask yourself, what do you usually use to fund your ads? A credit card, right? I mean, most e-commerce businesses don't just drain their cash, we use credit cards. And you see, credit cards often do something you may not be aware of. They shift your focus to points and perks, and meanwhile, they bury all the terms deep in the fine print. So what? Well, they can make it incredibly challenging to manage your business's cash flow. Why? Because those 5x rewards don't actually amount to your business growing. It's almost as though they were just there to get you to sign up. In fact, while traditional credit cards often promote perks and rewards, these benefits don't necessarily translate to business growth. So what's the alternative? Well, the alternative is finding a solution where credit terms that are engineered for your specific business that actually enable your business to grow. So how? Well, a credit card and banking platform that is tailored to your needs as an online business. And let me explain. Today, I'm going to show you how businesses like yours can boost profitability by leveraging the very tools that these big credit card companies tend to not want you to know about. And this is the exact same process companies like Everyday Dose use to grow from $5 million a year to $100 million a year in just 12 months. It's also the same process that Water Doctor, a virtually new e-commerce store, used to go from 0 to 7 figures in under a year. Here's the 30-day lie. You see, there's an uncomfortable truth that nobody in the financial system wants you to face. The system was not built for you. The current system was built 75 years ago before people could even dream of businesses like yours. So it's no wonder that that very system doesn't have the tools you need to scale in modern days. Traditional credit cards weren't made for you to manage cash flow better. They were created for huge institutions to get rich off of these suckers who spend more than they have. In fact, the whole 30-day payment terms that most credit cards offer is a total lie. Why? Because they don't actually give you 30 days to pay them back. In fact, they often only give you on average 15 days, and sometimes it's much worse. Imagine making a crucial purchase on the 28th of the month, and then your statement closes on the 30th. That doesn't give you 30 days to pay, it gives you 2. Meanwhile, your actual revenue cycle, that's more like 60 to 90 days for most e-commerce businesses. You're spending on ads today, waiting for conversions, then waiting again for product delivery and potential returns, and before that, cash is truly locked in. This misalignment creates a perpetual cash flow crisis that makes scaling nearly impossible, which is a credit limit trap. But honestly, the 30-day lie isn't even that bad. What's worse is not getting access to that cash flow you need. Let's say you launch your business, you get a $25,000 credit limit. 6 months later, you're doing $300,000 a month in revenue and spending $150K on ads, and you call to increase your limit, right? What happens? You get declined because you don't have 2 years of business history yet. Your business might be great, but that's still a problem. And the reason is painstakingly simple. They're using outdated underwriting models that don't understand your e-commerce business. The points mind game, you might think points and rewards are everything, but in many cases, those perks don't align with the everyday cash flow and growth needs of a business like yours. And that's the real challenge. Most traditional credit card programs are not built for businesses like yours that want to scale. Because the truth is, if you're optimizing for perks and points, you're probably not optimizing for growth. I mean, with all those points, you could get free flights for years, no? Sure. I guess you technically could if it were true. Only what they don't tell you is that they buried in the fine print, it says you only get 5x points up to $150,000, for example. Which means if you're spending millions of dollars on ads, you're only getting about 5x the points on a small fraction of that. And here's the real kicker. While you're chasing these mediocre points, you're missing the much bigger picture. They know that by distracting you with dreams of business class upgrades, you won't notice that the rigid payment structure are costing you 10 to 20 times more that in lost growth opportunities. Would you rather have 100,000 membership reward points or an extra $1 million in revenue? And that's not hyperbole. That's the real trade-off happening right now in your business. Then there's the fact that you can't even use your credit card on half the stuff that really matters. For example, buying inventory. We all know that some manufacturers require wires. That means no rewards, no extended runway on your biggest purchases. Now, at the heart of this broken system is a fundamental misunderstanding of how internet business operations operate, specifically with regard to the cash conversion cycle. But e-commerce operates totally differently. First, you spend money on ads today just to get people's attention. Second, you get conversions days, if not weeks later. 3, you ship your products that arrive 3 to 7 days later. 4, you wait through the potential return period, which can be up to a month. And 5, only after all those steps, if that revenue actually secured in your account, that's a 45 to 90 day cash conversion cycle at minimum. Yet your credit card company is demanding full payment in 15 to 20 days. This misalignment is the single biggest killer of businesses' potential growth. Instead of reinvesting your profits into more inventory and more ads, you're constantly pulling capital out of your business to pay down your credit card. And it creates a perpetual cash crunch that makes scaling beyond a certain point nearly impossible. Why? Because you never reach terminal velocity. Terminal velocity is the point at which you have all the resources you need to actually begin your exponential growth. And once all those preconditions are met, well, the growth becomes inevitable. And what's the primary component in that? Enough working capital to reach scale. You see, there's no winning in this current system. It's not that the system is set up for you to fail. I mean, how could it be? Because it is just not set up for you. That's exactly why my friend Yassine created the company Parker. Parker isn't another credit card or a traditional financial institution. Parker is a complete financial growth engine designed specifically for e-commerce businesses who understand that cash flow flexibility is the most powerful lever for scaling. And here's how that ecosystem enables you to grow. Forget the traditional average 15-day payment cycle. With the Parker card, you get rolling credit terms ranging from 15, 30, 45, 60, or even 90 days. That means you can virtually spend money today and only repay in 3 whole months. But not only that, with normal credit cards, you'd pay everything in a big fat bill at the end of the month. Parker doesn't do things like that. Instead, Parker allows for daily micropayments. So if you spend $50,000 on inventory today, you can set that purchase to be repaid in 60 days when the inventory has actually arrived and been sold and is now actually in your Parker bank account. And if you spend $100,000 on Facebook ads tomorrow, you can set that to be repaid in 45 days, only after those ads that have converted and generated the profit. With Parker, every single individual purchase gets its own individual repayment timeline, which allows you to avoid taking one big hit on your cash reserves. This simple change aligns your expenses with your actual revenue cycle, eliminating the cash flow crunch that's been holding you back. So you know about Parker's rolling terms, but Parker also offers you credit limits tailored to your business. The old traditional banks underwrite based on outdated metrics like personal credit scores or 2-year-old tax returns. And Parker knows that your tax returns from 2 years ago are in no way representative of your business today. That is why Parker elevates your business based on real-time performance. If your business is growing 30% month over month, your credit limits your growth. And the Parker team is there to literally help you every step of the way. That means no more being stuck with the same $25,000 limit when you're doing millions in revenue. Parker's clients regularly see credit limit increases of 10 to 20x higher than what traditional banks offer. That's why Parker allows credit surges when you need them. Now, earlier I gave an example of buying $50,000 of inventory. Some of you probably thought, but for inventory, I need to send wires. And you'd be right in saying that, which is why Parker introduces bill pay. And with bill pay, Parker sends the wire on your behalf, and you still get all of the benefits of your Parker card, including those rewards and rolling payment terms. That means you can get real rewards and longer payment cycles on what matters the most in your business. And Parker Intelligence goes beyond just the Parker card. Parker's AI-powered analytics platform gives you real-time visibility into your business health, covering everything from product-level profitability analysis so you know exactly which SKUs are driving your bottom line, your customer LTVs and CAC calculations that reveal your true marketing efficiency, cash flow forecasting that predicts exactly how much working capital you'll have 30, 60, 90 days from now. And Parker eliminates the guesswork from your financial decisions, and banking that actually pays you. Traditional business checking accounts pay virtually zero interest on your deposits. Parker offers high-yield business accounts that currently pay up to 3.1% average percentage yield. With multi-million-dollar FDIC insurance, that means your working capital isn't just sitting idle. It's generating returns while you decide how to deploy it. So we have Everyday Dose from $5 million to $100 million, a mushroom coffee company that was stuck at $5 million in annual revenue. Their ad campaigns were working, but they couldn't scale because their liquidity was constantly tied up in inventory and their Amex limit was maxed out. And after switching to Parker, they leveraged 60-day rolling terms to free up over $1 million in working capital. This allowed them to triple their ad spend without cash flow constraints, secure better pricing on larger inventory orders, and launch 3 new product lines simultaneously. The result, they scaled from $5 million to $100 million in annual revenue within those 12 months. Caraway 3x ad spend overnight, a rapidly growing cookware brand who is choking their ad spend despite seeing ROAS of 4 to 5x on their campaigns. Why? Because their traditional credit card payment cycles meant they couldn't reinvest fast enough to maintain momentum. No matter what, the old system never allowed them to reach terminal velocity. And Parker's flexible payment terms allowed them to triple their ad spend overnight, maintaining their cash flow while dramatically accelerating growth. Because as a result of Parker, they were less reliant on external capital, which means improved cash flow. With Parker, Caraway was able to reach 190% growth in quarterly Amazon revenue, saw a 70% increase in year-over-year customer purchases without diluting their cap table. How? By unlocking the capital they needed to reach terminal velocity. Water Doctor, 0 to 7 figures in 12 months, was a brand new company with a great product but limited access to capital. Traditional banks wouldn't even consider them for meaningful credit lines. But Parker elevated their business model, early traction, and unit economics, not just their company history. Parker provided them with the capital they needed to scale, inventory, and marketing simultaneously. The result? They went from 0 to 7 figures in just 12 months. Now you might have some questions or concerns. I like my Amex points for travel. And look, I get it. Those first class flights feel great. But Parker is built for founders who prioritize business growth over personal perks. Consider this. If you're spending $1 million per year on ads and inventory, the difference between Parker's flexible terms and Amex's are a rigid 30-day cycle. That could unlock an additional $500,000 in working capital if deployed correctly. That could translate to millions in additional revenue. Would you rather have a few free business class tickets or grow your business 2 to 3 times faster? Because with that growth, you could probably buy 300 first class tickets. Parker even offers 2x rewards, but what I will bash are people who value personal perks over their business's growth. But the truth is, you can't have both. Another thing you might ask is, well, my CFO really likes my expense management with a company like Ramp. Well, Ramp's expense management tools are excellent for tracking internal budgets, but they don't solve fundamental cash flow problem that's holding back your growth. Parker actually gives you the same visibility into expense management, but with the added benefit of flexible payment terms that actually align with your revenue cycle. It's not just about tracking expenses, it's about optimizing. With those expenses impacting your cash flow, you may say, I already have a net 30 term with my supplier. That's great. You've already built stronger vendor relationships, but Parker's flexibility extends beyond just vendor payments. What about your ad spend on Facebook, Google, or TikTok? Most of them don't offer net 30 terms, and when they do, it's very rare that you even get them. And what about your agency fees or software subscriptions or the dozen of other expenses that demand immediate payment from you? Parker can give you up to net 45, net 60, or even net 90 terms on everything, not just inventory, purchases. Look, I'm gonna be honest here. Parker isn't for everyone. In fact, it probably isn't right for most people. It's really only designed for high growth internet businesses that actually want to achieve hyper growth. This is for the teams led by founders who are eager to grow. This is for those who honestly just want to do everything to make more money faster. Financial leverage is by far the greatest tool in your arsenal as an online business, so use it. Now, because Parker is not for everyone, they can operate on an application-only basis. Because of that, Parker wants to work with founders who are actually serious about scale, not just looking for another credit card. And since Parker has launched, the response has been insane. I mean, Parker has already processed over $1.5 billion worth of transactions. But in order to serve their customers best, Parker has to limit their intake each month. In fact, Parker can only take on about 100 companies per month. So if you are accepted, you'll join an exclusive community of high growth founders who are rewriting the rules of internet business. But I've worked out an exclusive deal with Parker. The next 100 people who join by using my link in the description of this video will get to skip the waitlist and will be the first to access Parker's Lifestyle Concierge, which is launching later this year. Which, by the way, will cost $20,000 per year for anyone who joins after the first 100. So here's the questions you need to ask yourself. How much faster could your business grow if cash flow constraints were removed from the equation? How much faster could you get to the one number you've always wanted to hit? I mean, that's exactly what companies like Everyday Dose, Colt Gaia, Caraway, and hundreds of others in Parker's elite community have done. And I will personally be moving all of my clients over to Parker with time because I have found it's the best platform to help e-commerce businesses grow and get the rewards they deserve. You see, in today's economy, only one thing is certain, and that's the fact that everything is uncertain. Access to working capital has never been more difficult to acquire, yet Parker knows it's the one piece of the puzzle you cannot live without. So you need to stack all the chips in your favor, and that's why Parker helps you do. You need to grow your business as fast as humanly possible, and that means you need to have the capital to do so. Forget about everything else, because when you 10x your revenue in a year, everything else will come to you very naturally. Truth is, the success of Parker hinges on yours. If you don't grow, Parker doesn't grow either. Parker's goal is for you to not just grow, but grow exponentially. If you're ready to find out, click the link below this video to skip the waitlist and schedule a call to see if you're a good fit for Parker. And during that call with Parker, growth consultants will determine whether it's actually right for you. And if it is, and you're approved, you could have your Parker card and banking setup completed within a week. So within just 7 days, you could already be fueling your next phase of growth. But you have to be quick because their calendars do fill up quickly. And as I've said, Parker does only have capacity to let about 100 founders in per month. And remember, those next 100 will also get access to the $20,000 a year Lifestyle Concierge entirely for free, once Parker launches that later this year. So don't let outdated financial tools continue to hold back your potential. And join the hundreds of internet founders who have discovered that with the right financial partner, true scale isn't just possible, it's inevitable. So I've gone ahead and linked that below this video so that way you can apply now. And once again, it's your favorite digital marketer here, Chase Chappell. Cheers and bye all.